We're here with David Nage of Arca, a Los Angeles-based money manager specializing in digital assets and cryptocurrencies. David, thanks a lot for joining us today.
Thanks for having me.
So the reason that we're having you in today is because Bitcoin prices have fallen below $8,000.
Oh my God.
Tell us, what do you think is driving this in the short term?
Well, I think there's a few factors. I think there's probably three factors that are drawing most of the concern right now. The CME had expiry today, and so as we relate at Arca, we are all practitioners from Wall Street and from the institutional management side. We know that when we have expiry, markets change. And so as you would expect on triple witching on a Friday in the equity markets, when you have options expiring, when you have dividends going X, things change, prices go down, there's usually compression. And so we expect that to also happen with Bitcoin. Additionally, I think what's happening right now is that we've been range bound in Bitcoin for roughly the last month or so, beginning since around mid-August or so. And so
range bound in what range?
We've been around 10,007 to around 9,700, give or take. And I think what we've seen right now is that there's been a lack of catalyst, either upwards or downwards, to push it forward or push it downwards. Backed, which just launched this past week, was supposed to be a major catalyst pushing the markets up. But the reception to that has been tepid, and I think also with that being tepid, we have to be very cautious about that. It's not supposed to happen overnight, where Backed is supposed to bring us to 20,000, 100,000 in Bitcoin price. It is a piece of institutional infrastructure that is key going forward, and that we need to give it time. And so, again, I think the market has been waiting for these stories to happen.
Just to stop there on Backed. Tell us, why was that a big deal? Why was that such a heavily anticipated?
Well, it acts as a clearinghouse, and it is a physical operation. So instead of CME, where you get fiat for your Bitcoin, there's actual physical delivery of Bitcoin with Backed. And so it is a institutional quality platform. NYC ICE backed it. Effectively, it raised about $182 million at a very large valuation. You had family offices and institutional investors investing in it. It is an institutional platform like Fidelity and BitGo and some of the other ones we've seen, Gemini also. It is a piece of key infrastructure that allows for the clearinghouse of Bitcoin, which is important going forward as we see more money potentially coming into the system.
And I mean, where do you see that Backed going? I mean, I know a lot of people are trying to figure out if that's going to be successful in the long term. What's your view?
I think right now what we have to see is that Bitcoin, from our standpoint, within digital assets and within the crypto ecosphere, we believe it to be a store of value. We believe it to be censorship resistant. We believe that there's a lot of merit to it. Outside of our box, institutional investors that manage trillions of dollars don't understand that value. They see it as a speculative asset where you buy and hopefully it accretes and they make money from it. They don't see it as that store value yet. And so once that narrative becomes clearer, and we're starting to see, especially in the equity markets, going back to that again, managers who are managing trillions of dollars. There was an amazing story from Business Insider. They've been interviewing CIOs from Nuveen to State Street that have been saying effectively that the equity markets, their day is over. We've had a 10-year bull run. No longer can they guarantee that there's going to be excess returns there. Fixed income has also had massive compression. We're seeing potential negative yields being discussed here in the country. And so where do you go? You know, as the story goes and the song goes, nowhere to run, nowhere to hide. And so effectively right now we're trying to figure out where that is. And so those managers, once they start to understand the dynamics of Bitcoin and the characteristics of Bitcoin, I think there could be a chance that happens if you look at probabilities. But if we're looking, 3 weeks, 3 months, a year down the road, it's going to take time. And that's the thing that I always try to preach to other family offices and other institutional investors. This is going to take time. However, Bitcoin has been around for 10 years. So we've seen it become more of a steady product. We've seen infrastructure being built around it. But again, it's going to take time.
Well, now, what about this pullback on prices? Is that going to prompt anybody to get out of this market, or is there value? Should people be getting in? I mean, like how do you think about that price, especially for an asset class that is, in relative terms, as young as this one?
Right. Well, obviously, I'm not going to give investment advice, so everyone can obviously do their own research. But effectively, going back to the days of traditional markets, if you believe that Amazon or you believe that Netflix has had a massive capitulation in price the last few weeks, If you believe those are companies of the future, that they're going to add value in your portfolio, and you see them going down, you see that as a price, you see that as an opportunity to buy. And so with Bitcoin, with there potentially being a drop, yeah, obviously people can think of it as a potential to buy. Again, you have to do your own research and you have to come up with a reason why you want to buy it. If it's for pure speculation, obviously that could play out. If you believe it's a asset that is a diversifier in your portfolio that you don't have access to right now, and we've seen it be uncorrelated, we've seen it be asymmetric to the public markets, that's another reason why you want to take a look at it. Price drops, obviously, everyone talks about it. Again, we're not really too focused on the price. We're focused more on what the technology is doing. And so I think there's a play for everyone to take a look at.
And I mean, do you have any thoughts on where prices might go over the rest of this year, or even maybe a longer term?
We're not in the business of speculating, and we're not in the business of price predictions. There are those in the market that do that. I don't necessarily agree with them. I believe we don't really have the KPIs and the data to really come up with those kind of forecasts yet. However, what we do know is supply and demand at classical economics. As of right now, Bitcoin has a hard cap of 21 million. As of right now, I believe we've mined about 18.5 million. And we're about to go through a systematic operation in about 5.5 months called a halvening, in which the supply is going to be cut in half. And so if supply continues to get cut in half and demand continues to rise, classical economics shows that price accretes. And so that is one of the only things that we can necessarily look at in terms of probabilistic determinations.
Okay. Now, a question is, there's a lot of money being put into this space by venture capital firms and trying to build, I think the term you used was infrastructure for this market. And why are they doing that?
Well, right now what you're seeing, I spoke to a family office recently, and he asked me point blank, my principal wants me to put in $500,000, $1 million into Bitcoin. What do I do? Completely out of the dark, doesn't know what to do. And we went through the steps. One, he could either do it self-sovereign, and he could go get a Trezor or a Ledger and do it himself, go to Coinbase and do that. Then he could either go to Fidelity or some of the other places that are more institutional and go to those and actually purchase and have them do cold storage. Or he could go to a fund manager. Right now, for large sums of money to come into the market, this physical infrastructure is needed for them to feel comfortable. They are used to having their assets custodied. They're used to having that custodial be there, so they could obviously help with anything that has to do with their P&L, having to transfer assets, having to make sure those assets are safe, having to make sure that those assets are in a place that cannot be necessarily stolen. And so right now, that infrastructure, yes, we've started to see that with Fidelity, we've started to see that with BitGo, we've started to see that with Gemini and Anchorage, but that infrastructure is really key for them to feel comfortable. Right now, what we're seeing is family offices and institutional investors dip in their toes with maybe $500,000, $1 million here and there. There is activity, I'm confident of that, there is activity amongst institutional investors dipping their toes into Bitcoin and other digital assets. However, when you actually want to go knee deep or you want to go waist deep into this world, they need to have places that they can store their assets securely and where they feel confident in. And that has been something that has still, to this day, held them back. However, again, with Fidelity and other places that are starting to build that infrastructure, that story should change soon.
Just on this theme of this market being a market in its infancy, and a lot of people think it's going to be a big market someday, but maybe not. I mean, I'm curious, going back to the idea of whether more institutional investors, I mean, even down to pension funds and mutual funds, will someday be involved in this asset class of cryptocurrencies. And we just wrote earlier this week about a price move that happened in the global Bitcoin market. Prices fell $700 in 30 minutes with really no fundamental change. It was our understanding based on some weird things that happen with an exchange that's based in the Seychelles. And I'm curious, does that kind of thing really turn off a lot of the big money who want things to be a little more predictable?
I think if you look at Howard Marks and what he's written about volatility and risk, an investor is not going to eat your lunch for volatility. an investor is going to eat your lunch if you have complete capital loss. And so, in my opinion, investors out there expect volatility, and they actually look for volatility. There are investors out there that want to see 20% IRR on a yearly basis and higher. There are those out there that understand that with higher risk, there is probability for higher return. However, with that, you have to be mindful that there are still investors who have to be very careful with their capital base, retirees and pensioners, as you mentioned. And so those investors don't necessarily have higher bandwidths for higher risk. And so they can start to dip in and they can start to look into it. But again, with volatility, that is not a bad word. And there have been other people in the space that have echoed those same sentiments. Volatility is not a bad word. Volatility means that there is money to be made. And hopefully we're all capitalists and we all want to make money. We want assets to accrete. But again, with volatility, you will see, higher returns. You'll see 5%, 10% volatility. You'll see prices go up and down. But as more people come into the system, hopefully volatility continues to smooth out. If you look 10 years into this, the volatility on Bitcoin specifically is also really, as represented, correlated to the equity markets, is actually fairly smooth. We've seen periods over the last few months where it's become higher, but the volatility of the overall space has come down. And so that will continue on as more assets come into the space. And those assets, the type of assets come in, hedge funds have always been known, from the equity markets. If a hedge fund is owning your stock, you would expect higher turnover. If it was a pension or an endowment, they don't really turn over their portfolios as high. So if you have long money, and this is a testament to my friend Mike Maples, if you have long money, that usually will stabilize a price. If you continue to have short money, like hedge funds that are constantly trading in and out, you'll continue to have volatility. But volatility is not a bad word.
Mm-hmm. Okay, I think this will be my last question, but I mean, Bitcoin is still well off of its all-time high, right? On the other hand, it's having a pretty good year if you just start from beginning of 2019. I mean, do you have thoughts on, like, again, I mean, not to ask you for a prediction, but do you think that it's important for Bitcoin to eventually get back to that high to bring in a new wave of interest from kind of maybe a broader public?
I think it helps for institutional investors, family offices, and others to understand what Bitcoin is.
Right.
To understand that it is a store of value, to understand that gold, your mom, your grandparents' grandparents understood gold to be a store of value. When the world became a scary place, you would always buy gold. In today's markets, and going forward, I used to do a lot of venture capital investing. If you look 5, 10, 15, 20 years down the road, and you look at our kids, I always think about this as an interesting kind of play. Our kids are hooked into gaming constantly. They're playing games like Fortnite, they're playing games like PUBG. All of those games have in-game digital currencies. They are programmed for these things going forward. And once they become bigger parts of our economies of scale, I don't think that they're going to have a relationship to a hard asset like gold, a legacy asset like gold. They're going to want to have something that they can see on their phone and that they can see on a mobile device. And so Bitcoin, in my opinion, lays into that perfectly. And so again, we have to look, our timescales have to change. It can't be in the next 6 months, can't be in the next 12 months. It really has to be in the next 5, 10, 15 years out. And I know that's hard for a lot of people, but that's really the way that I think about it. That's the way that we think about it at Arca. And I think that's important for people to really take perspective on.
Mm-hmm. Thank you so much for your time. Really appreciate it.
Thank you.